Is there a lack of strong communication lines between the financial industry and Washington right now? Are you getting the cooperation that you'd like to see?
Yes and no. There was a lot of communication, but not as much cooperation. We're frustrated. I will be holding a hearing on Friday, February 5th, an unusual Friday hearing when Congress, I think, won't be voting all day. And the topic is, how do we get more money lent? We are not getting the volume of loans we want, and so some of what the president talked about with $30 billion is a way to do it. And I think the banks, the big banks in particular, have been too resistant. Now, to reform. The smaller banks, by the way, make the argument that they would like to lend more, but some of the bank regulators, that they're getting a mixed message. So we're going to have the small banks, the small business borrowers, and the regulators all on the same day and try to sort it out.
Well, that is an issue, and it's been brought up now for months that there are a few messages, and one of them is coming from Treasury telling the banks, we need you to have these capital levels. We need you to be, your liquidity levels to be at X amount, yet we want you to lend more. There's an issue there. Is that something that you're going to focus on?
Not so much that one, because the capital level issues have been more of the big banks. Our problem has been, at least what a lot of the community banks have said to us, is they had loans they were ready, willing, and able to make, but the bank examiners were being too tough. Look, I have some sympathy for the bank examiners. In the history of the world, no bank examiner was ever bowled out for a loan that wasn't made. They have been criticized for loans that were made and maybe shouldn't have been. So what we're told by some of the bankers is they're getting mixed messages. The bank regulators at the top say make loans, but they run into resistance lower on. That's why we want to have them all there the same day to talk about it.
Chairman Frank, you said before you came to Davos that you were coming here to discuss regulation, obviously, but particularly the argument made by some that American businesses cannot compete on a level playing field with others around the world if we do see certain reforms put in place. You don't buy that whatsoever.
Oh, no, I think it's important for us to try to work together. And I had, for instance, one conversation this morning reaffirming with people from the European Union and the United Kingdom that they're going to do the same thing we're doing with regard to requiring people who make loans and then sell the loans, securitize them, to keep some of the risk back. And we're talking about the same numbers. I have been meeting with and talking to a lot of people who are in the bank regulating business in other countries, trying to make sure that we do this together. We're making progress on that. We're going to go ahead with regulation anyway because there is this real demand for it. It would be better if it was done together. And frankly, as we make it clear we're going to do it, well, let me put it this way. Historically, the U.S. has been the laggard here. Other countries have complained that we were too deregulatory. And I think there will be a lot of cooperation as we go forward.
You've talked about countries that if they act as quote-unquote escape hatches for financial companies or for any trades, whether it's with individuals, that you will not allow that, you being the U.S. government, to go forward. You've talked about sanctions even potentially. Explain.
We have put into the legislation that we adopted in the House, and that I hope the Senate will soon adopt, a rule that says this. We are going to try to harmonize this, not have one government doing it, but similar rules from the European Union, the United Kingdom, Japan, Canada, the other major economies. If there are smaller countries that decide to game the system by saying to some of these institutions, hey, come here, we'll let you play this game and that game, we have instructed the U.S. Treasury and the Federal Reserve to ban them from participating in the American system. And the relevance of sanctions is this. We know how to do that. We have done it to Iranian banks. My committee has worked on that. Iranian banks have been denied access to the U.S. financial system. We know how to penalize people who are acting irresponsibly, and we're prepared to do that with regard to smaller countries, any country that tries to give people a base from which to evade our regulations.
Chairman Frank, it is compensation that makes the headlines when you're talking about reforming America's banks. That's not the most critical reform issue, is it?
It's not the most critical, but it's an important one. There are two levels of compensation issues. First is the amount. And as the president correctly said, it's a little hard for them to say they can't pay $10 billion a year in taxes when they can pay 5, 7, 8, 10 times that in bonuses.
To be fair, though, that bank tax does single out banks, and other institutions such as GM and Chrysler and their financiers got TARP funds.
They did, but not other institutions, GM and Chrysler. Mostly it went to banks. And besides, GM and Chrysler didn't get the TALF and the TALC and the this. There were a number of guarantees from the FDIC. There were a number of pro-liquidity programs that helped the banks from the Treasury Department, the FDIC, the federal, that they didn't pay for. So they have no complaint about this. But the banks helped cause this problem. They were helped to get out from under. I have no sympathy with their complaints about that, and I believe that tax is going to go through. And, of course, some of the people complaining about it are also the ones who want us to reduce the deficit. I can't reduce the deficit with a wave of my fingers. It's going to take things like that to do it. The other part about compensation, though, is this. It's the structure of the incentives. I believe, and there's a wide consensus internationally about this, you had a situation where people they took a risk, and if the risk paid off, they got a bonus. But if the risk didn't pay off, they didn't suffer any penalty. And in fact, if they took a risk and it paid off, and it looked like it paid off for a couple of months and later blew up, they didn't lose anything. We have mandated in the bill we passed that the regulators prevent any structure of bonuses that give people the incentive to take a risk with other people's money and not have any risk of their own.
And you think that bill will make it through the Senate and to the President's desk this
Yes.
year?
Yes, definitely.
We'll be
that
watching.
piece, certainly.
We'll be watching. Chairman Frank, thank you.
Okay, thank you.